What's going on, Canopy growth traders and investors? It's Rod with POW Group. Welcome back on The Pursuit of Wealth, your home for MJ stocks, crypto assets, news, and interviews. Today is Saturday. Happy Saturday. It's June 7th. Hope you're having a great weekend. In this video, we're going to discuss Canopy growth up 24% at the close. We'll discuss why the jump. I'll give my thoughts and opinions. And give me your thoughts and opinions in the comment section below if you saw anything. Personally, I don't think it was any news-driven performance. I think it was just based on the amount of volatility and pullback we saw from earnings. It's just been volatility city. And we'll take a look at CGC. We'll take a look at the price chart, what to expect in terms of the technicals and the price action in the days, weeks, months ahead. Before we do, make sure to smash the like. If you're new, you can subscribe. Tick the bell. You'll be notified on any future videos or when I go live. And as always, this is not financial advice. This is for entertainment purposes only. And I do own a small position of CGC in my portfolio, full disclosure. You can also follow us over on X, formerly Twitter. Handle for that is @GroupPow. Going to be using that as my platform of choice going forward. So I posted this video, this was about a week ago now, their Q4 2025 earnings missed estimates in full fiscal 2025. It actually bombed it really, really bad. It was not a great report whatsoever. They missed analyst estimates by a large margin. You can see here in terms of EPS, 209% surprise miss. And then in terms of EPS, they came in, that was EPS, and then revenue was a surprise of 7.42%. So it came well under estimates from analysts, and we had a huge pullback. I've also been working on some POW Group, POW Algo indicators and alerts. And one of the new ones that I created was the POW Ultra Oversold and Overbought alert and indicators. And as you can see, we had this descending triangle here leading into earnings. We bombed earnings, and then we were also overbought, ultra overbought. And then we hit ultra oversold, and that was a great entry point as well. If you just entered there near that ultra oversold, you can see here that red X marked the spot. And from that low to the high here, we're up about 43%. So that was a great indicator and entry point if you're looking for an oversold bounce and a nice, potential short-term trade. But one thing you'll notice here is we're hitting ultra overbought indicator here as well. We've already had the EMA 12 and 26 bull cross as well on the 2-hour time frame. So I would expect a pretty sizable pullback into next week. Could easily be 10-20%. As you can see, we could pull back 12% and just be back testing EMA 12 and just be healthy at that point. And if we zoom in here on the 2-hour time frame, you can see from the low to the high, we held the 0.32 fib on that 2-hour consolidation. So it was healthy consolidation. And we just confirmed the bull flag. The target was 159 and the high of the day was 170. So in terms of percentage, we overshot it by almost 7%. So expect a pretty hefty pullback into next week. Like I said, more than likely going to be 10-15%, and hourly consolidation more than likely going to be coming on Monday or Tuesday as we hit that ultra overbought indicator here. And you can see overbought on the 2-hour time frame. So if we take a look at the daily time frame, into that earnings, we had that gap in the chart as well at 164. So we filled that gap. And like I said, we pulled back a tremendous amount, right? We were down over 41%. So in my opinion, once we started the daily bounce, it was just nothing but, the technicals kind of catching up with itself, filling that gap, and the huge volatility that we've seen, right? So we had that move all the way down at 77 cents, all the way up to $1.99. When you're up that much, 159%, 160% in a very short period of time, you need to expect a pretty sizable pullback, at least 20-30%, and then couple that with bad earnings, huge miss, that exacerbated the pullback. So not surprising to see us pull back 41%. If you look at the weekly time frame, though, we haven't even broken the high of last week yet. So this bounce, while it was impressive and up 24% at the close yesterday on Friday, like I said, we haven't even broken the high of the previous weekly candle. So we're just back within that weekly candle range. And if you zoom out to the monthly time frame here, we actually could change the monthly trends. We have our low, high of the bounce, and we just barely formed a higher low. We had 122, the low last month, and this month sitting at 118. So we do have our low, high, and higher low. Now we need the higher high. So key resistance is going to be that 199. If we break that, then monthly uptrend confirmed. Next level of resistance we're going to be looking at would be EMA 12, and that's sitting at 334, which is also in line with the 50 weekly there at 343. So we could see some big news here coming. And what I think is more than likely going to happen is you're going to see tailwinds from the broader market. SPY, super bullish weekly candle close last week. You can see here we were ultra oversold here as well, and huge bounce off of the lows. We also had an EMA 12 and 26 bull cross there on the weekly time frame, and it's a weekly bull flag. So if you zoom out, the fact that we closed above 594 is ultra bullish as well, because not only did we confirm the weekly bull flag with a break of 594.50 resistance, we also closed the weekly candle above the previous weekly candle and that key resistance at 594. So this is extremely bullish and shows risk on in the market, and we could potentially see all-time highs over the next couple of weeks on the S&P 500. If you take the measured move from that bull flag, move it out to your 0.382 fib, that will give you the measured move, and it's saying somewhere around that 657 to 660 area is the target there for the weekly bull flag. So this is looking like all systems go here over the coming weeks, and yeah, it's going to be go time, I think, here over the next couple of months as the markets look to see that final blow off top rally. And like I said, this bodes well for CGC and the rest of the MJ space, as we could see continuation, CGC closing at the high of the week last week as well. So key resistance is going to be 188, and then like I said, 199. Break 199, then monthly uptrend confirmed, and we're looking fantastic. On this weekly consolidation that we saw a couple weeks ago after the bombing of earnings, you can see we just back tested the 10-week moving average. We held that. We actually closed above it, and again last week. So overall, not looking too bad here, and we do have some runway, like I said, until that 343 50-week moving average. And on the daily time frame, we closed above the 100 weekly. We have nothing nearby until the 284 level there at the 200-day moving average. So overall, looking really good. I wouldn't be surprised if we saw some sector news either. And like I said, couple that with the strength that we've been seeing from the broader market, specifically on the S&P 500. Like I said, that weekly bull flag looking fantastic. All right, going in it there. Let me know what you think of this in the comment section below. It's Rod with Pow Group. Thanks again for joining us in the pursuit of wealth, and we'll see you again on the next video.